Hello, this is Matt on the Moon Lambeau channel. Do you want to be XRP rich? Well, I can tell you how to do that, at least what my opinion is. And the answer is, if you're an XRP holder, all you have to do is nothing. Now look, I don't have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything that I say or write. I'm just an enthusiast, and I think it's fun to talk about these topics. And so when I say, what do you have to do, I'm not encouraging you to literally do or not do something. I'm just speaking in a general sense what I think I suspect would work for people. And I think that what I cover in this video may prove to be one of the most important Moon Lambeau videos to date, because frankly, what I know to be true is that whether you're talking about the stock market or you're talking about the crypto asset class, humans behave irrationally. They buy and sell emotionally, and they have these time horizons that are completely ridiculous. They try and time markets, and none of this stuff, and there's plenty of data to prove, I'm going to share with you in this video, doesn't work. I have data that is crucially important that I'm going to share with you about the stock market and also the crypto asset class. The reason I'm going to talk about the stock market is because the concepts that I'm going to share on the stock market, which have been tried and true for over 100 years, they apply to cryptocurrency because it's humans with the same DNA acting in the same general way in both asset classes. And yes, there's more volatility in crypto. Well, there's a number of reasons. Well, including, first of all, there's a frenzy around the asset class because technologically it's the new hot thing. So yes, frenzy, more volatility. And also there's less money in it, so it's easier to manipulate price up and down. And I got all that, but it's still the same human DNA at play here. And so as I record this, mind you, XRP is sitting around 64 cents. And I've held XRP since November of 2017. I could have sold it anywhere along the way. I could have panic sold. I could have freaked out. But you know what I knew before I ever held any cryptocurrency? And mind you, I jumped into crypto in November 2017. So I knew before that, though. In order to be successful in investing specifically in the stock market, all you have to do is hold for the long haul. This is what data indicates, and so I want to share this with you. There's a PDF that was put together from an investment firm named Putnam, and I wanted to share some of the specifics with you because if you miss just a very small number of the best days over a longer period of time, your opportunity for serious returns is devastated, if not outright ruined. Like it's like these numbers are going to be staggering. So I hope that you'll be willing to stick with me to the end of this video because I do believe you'll find it worth it. But this is exactly why I refuse to time the markets. There's all sorts of times in holding XRP where I've thought, based on what I'm seeing from analysts, XRP is probably gonna go lower. What should I do in that situation? Nothing. That's what I told myself. I'm going to do nothing. I'm going to watch if I'm right and and XRP goes down, I'm going to watch my XRP become worth less than it was before relative to the United States dollar, and that's going to be fine with me. That's it. Because if I sell my XRP hoping to buy in lower and it goes the other way, if it is one of those incredibly important days and then XRP takes off from there, I could completely wreck my multi-year plan for, XRP resulting in potentially life-changing money here. So, I'm not going to do that. And so you can sit here and make fun of me. You could be one of these people that maybe you have found a success a string of times in a row, buying at key times, selling at key times rather, buying in lower. Good for you if you've done that. You have substantially higher risk exposure to the markets than I do. I have way lower risk. I'm not willing to take on that risk. And so that's why for me, I'm going to do precisely nothing. And so here's what Putnam Investments wrote at the top of this PDF. Time, not timing, is the best way to capitalize on stock market gains. By trying to predict the best time to buy and sell, you may miss the market's biggest gains. And so to be clear here, we're talking about the stock market here specifically. They're actually talking about the S&P 500. And what they're talking about here is absolutely applicable to the crypto markets. And I'm going to highlight specific data from the crypto markets right after this. So I am going to talk about it as well, but I just want to be clear. There's sufficient data everywhere you look if you're interested in finding it. And there's so much opportunity for those that are willing to hold for the sufficient amount of time without letting emotion get the best of them when there's market dips here. And so here you see they wrote, The US stock market has been resilient throughout its history. Stocks routinely recovered from short term crisis events to move higher over longer time periods. And then they wrote, stay invested so you don't miss the market's best days. And so, look, to me, this is what I'm doing for myself. I refuse to try and time the market. That's why I dollar cost average into XRP for a number of years. I haven't purchased XRP since October of last year because, frankly, I have enough. It's my largest XRP holding. And also because when I do start selling it, I was hoping that by the time this XRP bubble does inflate, that I'd have held it for at least a year so that my tax exposure would be substantially less, because that's how it works in the United States, frankly. You got to hold for at least a year if you want long-term capital gains tax rate. But anyway... so they wrote, stay invested so you don't miss the market's best days. And so then they have this little sample investment period from the end of 2005 through the end of 2020. And so what if you had invested $10,000 into the S&P 500? And so the S&P 500, of course, that's just a market index. It's the 500 largest companies in the United States that are publicly traded, and that's 500 largest if measured by market cap. And so it's a pretty broad range of different types of companies out there. So if you just invest in that index fund, $10,000 into it, what would happen after that 15-year time period? Well, your $10,000 would be worth $41,100. It would have increased at an annualized rate of 9.88%. So if you round up, that's about 10% per year. That's pretty good for the stock market. Now, I know these numbers might look silly and small because we're used to crypto numbers now. I totally get that, but that's not the reason I'm highlighting this. It's the methodology to finding success that I'm highlighting here. But what if, over that 15-year time period, what if you missed just the 10 best days, the best performing days, and not 10 out of 1 year, 10 out of the whole 15 years? You only missed the best 10. Well, what would your $10,000 investment look like? Well, again, if you miss none, it would be worth over $41,000. But if you miss 10 days, it would be worth only $18,829, which means annualized, it would have increased by 4.31%. That's it. So you basically, you more than cut your return in half just by missing the 10 best days. Do you really think that you're smart enough to time the market? Because even if you're good a whole string of times in a row, you mess up once and you've got a world of hurt. And so I know the data shows that the people that just don't try and don't try and overcomplicate it. They just invest, and then they hold, regardless of whether the market's up or down. Those are the people that do well. That's what the data says. That's what I'm showing you right here. Now, mind you, this 15-year time period, think about this too. From the end of 2005 through the end of 2020, basically, if you round up 10% annualized return, that's good for the stock market, right? I know, not in crypto. I got it. Crypto's awesome. Totally agree. But consider this. That includes, that average of 10%, that includes the fact that we had some serious downward price action with the bubble that popped, the housing bubble that popped in 2008 and 2009. And I don't remember just how bad the stock market cratered as a result. I'd have to admittedly pull it up, but it doesn't matter for the purposes of this video. I guess it went down, 30 or 40%, whatever the hell it was. It was substantial. For the stock market, it was ridiculously substantial. And so that caused people to freak out. And as the price went down, they didn't want to lose even more, so they panic sold. But what happened? The market recovered. Of course it recovered. And consider this. You really think it wasn't going to recover? Because you're talking about, again, what's the S&P 500? These are publicly traded companies. The 500 most successful companies, the largest companies publicly traded in terms of market cap in the United States. If you don't think that would come back after downward price action, you're betting against the American economy ever recovering. Do you really, is the country going to stop existing? Do you really think that's going to happen? And so for me, sitting here looking at all the data about how the stock market's performing, I'm just sitting here why? If you have this data, why would you ever worry about timing the market? I don't care how far down the S&P 500 goes. I'm just saying, for a person that's invested, does it really make sense to try and time it, to sell on the way down? You think it's going to go down lower, but what if it reverses? What if you're wrong? It doesn't take many days missed to really screw yourself. In fact, if you miss the 20 best days, now let's take a look at this. If you miss the 20 best days over that 15-year period, you would have only made 0.88%, less than 1% annualized return. So that $10,000 would have turned into only $11,400 in 15 years. What if you missed the 30 best days? You're actually down now. If you miss the 30 best days out of 15 years, mind you, there are 365 freaking days in a year. If you miss just 30 of them over a 15-year period, you're down 1.88%. Your $10,000 would be worth $7,526. What if you missed the 40 best days? Your $10,000 would turn into $5,205. You'd be down 4.26% annualized each year. That is ridiculous. And so, similarly with crypto, what the data has shown is that we've been in an uptrend for 12 years with some serious pullbacks along the way. Just for crypto in general, it's led by Bitcoin, absolutely. But XRP, along with other cryptos that have been around for a long period of time, it's all relative, of course, trending upwards. Got it? And so here's a tweet, and I actually shared this one somewhat recently, just a few days or so ago. But this one comes from my fellow XRP YouTuber, the Blockchain Backer. And he showed this chart, and his chart happens to be a one-year chart, but I can still use it to make the point that I want to make. Because the truth of the matter is, most time spent in crypto markets is you're trading sideways or down. That's typically, and so the days that are up, yeah, they're massively up. A lot of the time, they're massively up. And so if you miss those days because you're being silly trying to time the market, you get wrecked. Just like you get wrecked if you try and do that with the S&P 500. Try and do that. It's not a good idea. That's what the data says, right? And so here's what the Blockchain Backer wrote. As a reminder, reduced volatility and boring price action is what you get 85% plus of the time in crypto. Red periods far exceed green periods. And so on his chart, which I'll make full screen in a second, you'll see the red periods are sideways or down action, the green periods are the upward action. And then he wrote, to enjoy the exciting moments, this is the stuff we've always had to endure. And so here it is now full screen. And again, this is just over the last year. But this concept is true for the entirety of the lifespan of the crypto asset class. It's a very small percentage of days that results in the most explosive growth. And if you try and be a genius and time the markets, you can get wrecked. And even if you're fortunate and don't get wrecked, are you really worth putting yourself through that type of risk exposure? Because the one thing that I can control is whether or not I buy or sell or hold. And so I bought when I wanted to buy, and I dollar cost averaged in for a very long time. And then the thing that I control other than that is I choose to do nothing. When the market's up, great. If it's not enticing enough for me to sell, great. I do nothing. If price is down because people are panic selling and everything looks like a mess, okay, great. I do nothing. Because the data shows the way this thing's going. Data shows that the markets, including XRP, trending upward. Bitcoin for 12 years, XRP's been around a little bit less than that. But it's moving in tandem with the rest of the market, and that's provably true as well. And I'm not going to talk about that more in this video, but that is provably true. XRP, with every other crypto, it just moves in tandem, not down to the second, the minute, the hour, the day of the week, so on and so forth, but it absolutely does. And so as a result of this, knowing all of this to be true, I sleep easy. Like, think about this. Do you logically think that with this most recent pullback, Bitcoin going from 65,000 recently down to 28,000 and something at the time I'm recording this anyway, do you really think that Bitcoin's going to go away forever? Do you really think that after these 12 years of Bitcoin price activity that this will be the first crash ever that results in it going to zero? Do you not see broader adoption in a general sense? An even better question is, given that we have data showing humans behave like this and there's a lot of volatility and tremendous pullbacks, like, shouldn't you expect this to happen in stocks and in crypto? And obviously more volatile in the crypto asset class. Of course, let's acknowledge that it really is for a number of reasons. But shouldn't you just expect this? And so here's what happens. This type of stuff, we know it's going to happen again and again and again, and there's always a narrative associated with all of this. Whatever's happening at the time, that's what's applied to it. Now, sometimes things really do happen in the real world that do affect the markets, but not always. In fact, a lot of the time, it's just stuff happens, and there's no great rhyme or reason, and then whatever is happening in the moment, that's attributed to it. And so then that can scare some people. And so do you really want to be one of the people that, you see everybody, the lemmings one after another right off the cliff, and then you see a news story that does sound scary? Oh my gosh, China banning Bitcoin, blah, 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 all this stuff here. Do you actually believe that this is all going away at some point? And if you do, fine. Like, I'm not telling you to buy or sell or hold. You do whatever you want. I'm just stating my case for why I think this makes the most logical sense for me specifically. This is what I'm doing. I am doing nothing. And you know what? It's pretty damn easy. I sleep very well at night. Let me assure you of that. And there's so many reasons for this. And then you think about how, like, given that everything's just moving in tandem right now, what the hell? It's hard to pick a loser right now. And it won't always stay like that. And I should be a little bit careful there too, just because I do think that there's a lot of the smaller, like, meme coins, this or that have been inflating and quickly popping. And I don't know that those are going to continue to move in tandem with the market. But if you're talking about like mid cap and large cap coins, yeah, I don't think there's a single exception to that, at least not that I'm aware of. And so I feel fantastic about all of this. And so look, I don't believe for a moment that these markets are just going to crater and go away. Just like I think it would be silly to think the S&P 500 is like never going to recover when it goes down dramatically. Because again, you're betting against like the economy of the United States never recovering. That's what you're doing. If you're selling right then, oh my God, it's never going to be higher. You're betting against the economy of the United States. That's absurd. And then when you're talking about an asset class that's moving together, if you're selling and you don't think it's going to go higher, you're betting against the continued existence of the cryptocurrency asset class. That's absurd. That's absolutely nutso absurd. That's how I feel about it. And again, eventually people will sufficiently parse out the differences between cryptocurrencies. The cryptocurrencies, whether it's, XRP or Bitcoin or Ethereum or Litecoin or Doge or whatever, eventually they'll sufficiently be judged on their utility, their merits. It's just not now because we're in the nascent asset class, but eventually there will, and then things won't be completely tethered together. But even then, the crypto asset class still isn't going away. But like at that point, fine. Maybe I'm betting on all the wrong horses. I own a couple dozen cryptocurrencies. Maybe all of them ultimately, once untethered, maybe they don't get long-term adoption. But right now, the market is moving together, and so I'm betting on the market, the cryptocurrency asset class on the whole. Frankly, that is what I'm doing by investing in a couple dozen different cryptocurrencies. And yes, XRP is my favorite for a number of reasons, but still, I'm betting on the market as a whole. That is what I'm doing. And so if I were to panic sell, I'd have to be betting against the entire cryptocurrency asset class. I'm not willing to do that. That sounds horrifically stupid to me. And even if we're entering a bear market, have a longer time horizon, damn it. Do you really think this stuff isn't going to come back? Because the people that panic sold the S&P 500 in 2008 and 2009 as it was dipping down, fast forward a decade later, tremendous regret, right? Of course. This is what the data indicates here. And so to get XRP rich, as far as I'm concerned, all I'm going to do, and I think this is going to work out for me, is I'm going to do nothing. That's it. Let me know what you think in the comment section below. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.